Are you wondering what are the different ways to invest? There are financial advisors, there are funds of all types, there are all these different kinds of investments. What are the ways that you can invest and what are the pros and cons of each? In this video, that's what I'll be sharing with you. Hi, I'm Camille Gaines here, and on my website, retirecertain.com, I write about and talk about my own investing experience over the past several decades, as well as creating multiple diversified income streams over the past 15 years after stumbling into early retirement along with my husband. I find that some of my financial coaching clients come to me with money that they either are using with a financial advisor or they have different funds or investments that they have chosen themselves. They have sort of a hodgepodge of investments, or people come to me and they're just getting started investing. They have money that they've saved, but they just don't know what to do with it. In this video, I'm going to clarify the different ways that you can invest and the pros and cons of each of those ways. If this interests you, make sure you subscribe to my channel and click that little bell so you know when I post a new video. If you like the video, it would be fantastic if you click that little thumbs up below it. All right, so the very first way is the easiest way. It's simply to hire a financial advisor. What are the pros of this? Well, the pros are that you get to delegate your investing, and that can feel really, really nice at times. All right, another really big pro of hiring a financial advisor is that financial advisors can keep you from making mistakes like selling low. They can keep you on track with your investment plan. Now, having said that, I'm not a buy and hold forever investor. I like to be more tactical in some of my investments where other investments are more buy and hold. That's not what this video is about. I just want to, full disclosure, want to throw that out. I'm not a passive long-term forever invest. Number one, I'm too old to use that strategy anymore. And number two is I've learned other things about that strategy and I prefer other ways of investing. Having said that, the biggest mistake investors make is reportedly selling low and buying high. And if you work with a financial advisor, first of all, it's expensive to work with a financial advisor. I like to tell my clients, figure out what you're paying in fees if you don't know for sure, total fees, and that's everything. And then that is presented in a percentage basis usually, but take that times your assets under management, the term financial lingo that's used, and see dollar amount what you're paying. 1% can feel really low. $2,000 a month can feel a little more expensive, right? So look at it in percent terms and dollar terms, and that is a con of working with a financial advisor. Granted, I am all for paying someone for the results that they can get for us for what they're worth. So make sure you check out my other video where I talk more about this in relation to financial advisors and financial advisor fees. The next con in working with a financial advisor can be strategy limitations. Almost all financial advisors are asset allocation based financial advisors. This means they take your age, they find out how much risk you want, and they invest completely based on that and keep that asset allocation or those percentages in those different asset classes for years and years. Now, every year they'll rebalance your portfolio, but you're returning back to those percentages. And if there's a major life change, yes, those percentages will change. If you retire or you hit 60 or maybe you hit 30 or you have a few kids, you might make a little tweak to it, but that is the basic model for almost all financial advisors. I'm always looking for financial advisors that are a little different. So if you are different, be sure to let me know. I'd love to hear from you. But most financial advisors, this is what they do. They do a basic asset allocation model among stocks, bonds, possibly some other assets, and that's how you invest. It's called strategic investing. There's nothing wrong with this if it works for you, if you have the time frame, you have enough money to do this. Absolutely not. It's worked brilliantly for a lot of people. But this is sort of the way it's done with most financial advisors. So know that this is probably how it's going to be done. It's not likely you're going to go to a financial advisor and they're going to say, I think you should sell covered calls on individual stocks, or I think you should consider buying a rental property for extra income, or that type of thing, because that's not what they do. It's not that it's wrong or bad, that's just what they do. It's like going to a surgeon and they ask you to take herbs for your cough. It's what they know. All right, so the next con of working with a financial advisor is that you still have to know how to invest. And I think this is the biggest thing that investors overlook, that it disturbs me. People think if they hire a financial advisor, they don't have to learn about investing. That's crazy. How could you hire someone? How could you go through the interview process and hire someone? How can you evaluate their performance for all that money you're paying them if you don't understand the basics of investing? You've got to learn about investing whether you invest yourself or whether you hire a financial advisor. And this is one of the things I love working with clients on that come to me and they have a financial advisor. Let's evaluate the job that they're doing for you based on the cost and understand what kind of results you're getting. And let's see what the other options are. These different ways that you can invest that I'm talking about here, and what are the pros and cons of those different ways. No matter how you invest, it's important to learn how to invest so you can manage, oversee your money at a very, very high level. The next major way to invest is to simply create a portfolio that's made up of ETFs, which are exchange traded funds. This can be a diversified portfolio, stocks, bonds. You can even go further than that and include some gold or commodities or real estate. That's what I do. A little more diversified, a little more defensive, but it's easy to do. So that's my very first pro, is that it's super simple. All you have to do is learn the basics of investing no matter what, and decide on your asset allocation, what percent you want to put into each asset class, and then decide if you want to invest in ETFs or possibly index funds. So that's a good option for a lot of people. The other really great thing about that, in addition to being simple, is it's basically free. There are no wealth management fees that are tacked onto this. So now, having said that, I'm saying that a little bit loosely because you do have to incur expenses in the ETF funds or the index funds, for example, but you can choose ones that are very inexpensive. Not only that, it's very unlikely that you'll have to pay commissions on ETF purchases or index fund purchases. At least you certainly don't have to. There are many, many good options to avoid fees on a basic portfolio of index funds and or ETFs. All right, the cons with this method is it takes more discipline. It takes more discipline. If you work with a financial advisor, the stock market drops 40, 50, 60%. It's happened before, 70% on the NASDAQ in the early 2000s. We want to run to our computer and sell. And if that's not your plan, then you're more likely to stick with your plan. Again, this isn't how I invest. I'm not a long-term investor, buy and hold no matter what happens. That's not how I invest. But that's how most people invest. Most people like to purchase a portfolio and hold it for the long term. So it does take more discipline if you create your own portfolio. The next con of holding an ETF or index fund portfolio that's static, that's fixed, that's a buy and hold no matter what, is you may not get the investment returns that you need in order to support you for life, to live your desired lifestyle, which is what Retire Certain is all about. It really depends on things that are outside of our control. The financial markets, the overall market, what's happening in the economy, honestly. And having gone through large bull markets, we feel like we can get the returns we've gotten over the past few years for the next decade or few years certainly. But after we've been through a bear market, we know that, wait a minute, gosh, this didn't work out so great, and we think that it's going to be bad the next few years. So if we just detach from that and realize that these are things outside of our control, and you may not be able to get the returns that you want if you're invested only with a simple asset allocation based ETF and or index fund. The third way to invest is to create a diversified portfolio of individual assets. This could be stocks, it could be bonds, it could be real estate, it could be other assets. This is a popular way to invest. You can see this from the wildly popular videos that are here on YouTube about certain stocks and choosing stocks. People love investing in stocks. It feels exciting. It feels cool to be able to do this. That leads to my first pro, is that it's enjoyable. It becomes sort of a hobby and people enjoy it, and a very, very few people are very successful with it. We're all encouraged not to pick individual securities. I think some people can do this very well. It does take a lot of work. Not only do we have to analyze each investment, but we have to stay on top of it. We have to stay on top of the news around that particular investment, and we have to stay on top of what's happening in the industry. It's not just about the investment. Politics can affect investments. Different happenings in the world can affect a stock that we own, changes, trends. There's so many things that can affect the price of an individual security. We have to stay on top of this as individual investors. So having said that, I guess I'm really saying that's a little bit more of a con. But what I wanted to say is it's a lot of work. It can be a lot of fun though, and it can be very enjoyable when you're profitable selecting stocks. I want to mention here, don't confuse stocks going up just because the overall market is going up and there's economic growth. That's separate from picking a stock because it is a good value or because the company has good growth potential or some other reason, perhaps technical analysis or some other skill that you're using. The next pro of individual securities or assets is that it allows you to sell covered calls. You may have heard me talk about before covered calls, and I think that they are a great way to generate income on stocks that especially when an investor already has chosen to have stock market risk. If you're exposed to the stock market, in my opinion, it can often make sense to generate extra income off of your stock portfolio with covered calls. The next pro of being an investor that purchases individual securities is that it allows you to really diversify. As I touched on earlier, a financial advisor is probably not going to tell you to buy rental property, but you may be called to own rental property. If you are diversified in your portfolio of individual assets, whether that's paper assets such as stocks and bonds, you may also decide to purchase some real estate or perhaps an online business, which is exploding right now in popularity. So doing and buying assets individually allows you to go outside of the paper assets that everyone owns in stocks, bonds, perhaps commodities and or gold. The next pro of managing your own portfolio of individual securities is that it's cheap. The wealth management fees are non-existent. You're not paying someone to manage your assets for you, and that is a big plus. Now let me go over the cons of buying and selling individual assets. I already talked about and touched on all the work that's involved and having to stay on top of everything, so I won't go there again. The next con is it's easy to get attached to your investments. Been there, done that. And when we do this, when we do all that research and all that work and we buy an asset, especially one that serves us well for many years, as many assets do, it can be hard to let go of that asset. And it may not be the best asset for us to continue holding from an opportunity perspective or from a risk perspective. And it's easy to fall in love with assets when we've done so much work to own them. The next con with buying an individual portfolio of securities is that it's really hard to purchase individual bonds. It's hard to purchase gold, for example. It's easy to go out and buy a portfolio of stocks. Those are easy, right? But individual bonds and other assets, commodities, gold, other assets are not so easy to purchase. And so that can be difficult for investors. That's what I wanted to share with you in this video. Above all, retire certain.